From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 17th, 2017. Today we're going to be taking a look at the GBPUSD, the Greater British Pound, versus US dollar for today's trade analysis. We're going to start here on the daily time frame. A few things to point out. First off is the longer term trend. We go all the way back into March of this year. We can see that this currency pair has been in an uptrend. Now we've seen a couple of times where the market pulled back before returning to the uptrend. We see it all the way back at the bottom of the trend where it pulled down and then returned to the uptrend. We see it in the middle of the trend where the market pulled down and returned to the uptrend. So we're seeing that now along the blue trend line. We're seeing that pullback against the overall long-term uptrend. We also note that the 100 period moving average is coming into play today as it has previously. Each one of these other dips that you see here in the uptrend, the market touched the 100 period moving average and then returned. You can see it down here at the bottom, a couple of times challenging the 100 period simple daily moving average and then returning to the upside. Came back down, touched it again a couple of times and then returned to the upside. And here we are again on the right hand side under the blue trend line. We're touching that 100 period simple moving average again. So it's another clue to potential support, clue to a support within the overall longer term uptrend. So that's our first thing that we want to note. Long-term uptrend, 100 period moving average, multiple tests of that moving average. Let's zoom it in a little bit here on the daily time frame. We zoom it in, and I'll just scoot it over just a bit so we can see these two circles on the chart. There's obvious historical support around this yellow shaded area, 1.2845, 2870. You can see the last time we were here, the blue circle, 1, 2, 3, 4, 5 days found support, and then eventually returned to the uptrend. You go back to the left-hand side, you see multiple days finding support at the yellow zone. So we know historically that this area into the mid to low 128s, 128.45, 70 is what it's highlighted as, has historically been support. So we now have historical support and the 100 period moving average in the overall long-term uptrend pointing to support here. Also, Fibonacci. We take Fibonacci from the lowest low of the red trend line. Let's just take this one off for a moment. The red trend line that you see here, the lowest low on the chart to the highest high, Fibonacci there, puts the 0.618 Fibonacci retracement level at 1.2848. Well, that sits at the bottom of our yellow shaded area. So now we have Fibonacci at the yellow shaded area with the 0.618. We have the 100 period simple moving average. We have historical support and the longer term uptrend and the pullbacks that we've seen within the longer term uptrend. So for the day today, and really since the past 2 days, we know with some fact that this has been support and is technically support here for the pound dollar. And the risk here is that the market changes its pattern and shifts its pattern back to the downside. It breaks through 1.2845 and continues to go lower. So then we know what our risk is. We know that there's a high probability support level right here at this yellow shaded area between 28.45 and 70, and we look for other clues. Now fundamentally this week I think it's been a really good week for the British pound. If we go back to several days ago where we got CPI data out for the pound, that was a little bit disappointing. But we go into yesterday when we got news for earnings and claimant count change and unemployment rate. All that news came out pretty positive for the UK. And then earlier today we had some retail sales data out of the UK that was positive, a little bit higher than expected. So we've had some somewhat positive news for the UK over the past 2 days, which we really haven't seen a significant reaction to that. And even yesterday's FOMC meeting minutes for the US was dovish, and the market viewed it as a little bit bearish for the US dollar, or cautionary for the US dollar, and we saw many pairs jump, but we didn't see the pound dollar jump. So we're seeing fundamental reasons for a stronger pound and a weaker dollar a couple of times this week. We see it as support, and we know that there's a technical support here at this level. So what I'm looking for is for a bounce. I'm looking for it just to stay here, looking for maybe the market to catch up to some of the fundamentals we've had this week, find support here just like it did back at the blue circle, and maybe make a bounce back higher. And again, the risk is the breakdown of the yellow shaded area. So if you decide to go long, your stop loss should be underneath the yellow shaded area. That way, if it does break down through the yellow zone, you limit the impact to your trading account, you move on and look for a new trade opportunity for the pound dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.